Do 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 do. Do do do. What are those mountains? Look at that. This I don't know if it's a new theme. I got an alert for PDL, and then my focus Palladium. What's up with that? Start checking out on related tickers. And this was insane. Look at that. Highest peaks, lowest valleys, giving almost all its profits back. Highest peaks, second phase, giving almost all back, guys. Every time, highest peak, giving almost back. Peak, giving back all, even more, even more. Wow. And then it tried again. After the crash of 2008, went for another run. And I think with the gold, is that when gold peaked? 2011. Look at those tops, those tweezer tops, those wicks. Those are warning signs, especially if they are located at the extension when you're far away from the 12-month moving average. So after you had big green candles, and you start having that first wick, ooh la la. If you're close by, maybe the signal's different, but I've noticed that every time, not every time, but when it gets far away from the 12-month moving average and you start getting these sellers coming in, that's actual buyers trying to get there, and then sellers coming in and saying, hey man, I think you're too far away. You're not really valued that much. Or in this case, maybe all previous buyers here that are saying, I'm not getting, this is a chance to get even or close to. Sell, create those wicks on monthly candles, and that is downwards pressure right here. Don't stick below the 12-month moving average, guys. I mentioned it for Bitcoin a few days back. If you're below it, look at that, guys. Says, I could bounce back. You're right here. You're not that far away from the top right here. You would have entered here off the breakout. It's a good, I'm a genius, or implied measure move. My target's not reached, but I think it could go back. We've all said to ourselves those lyrics. Oh, look, buyers coming in. Well, it's a question of weight of evidence. And as soon as you're below 12-month average, that's like one that should override almost others. Almost like no reason to stay there. Your reasoning should be, oh, well, okay, I'm below. That's heavy downwards pressures. Rallies are most likely going to be sold into. So I'm just going to exit. Wait for next few candles. Look at other charts that are exploding, that are this stage right here, exploding. Instead of focusing and getting trapped and hoping that this goes back so I could get back a little bit of my loss, and hopefully that loss will, well, yeah. What happens after that? Ooh, could have went the other way, but right now, stock 1 month, 2 months. Oh, this is a bottom, this is a nail. But you're still below the 12-month moving average, guys. Below. Gapped down. Try to go back up. Below 12-month average, even if you're pulling back now you have a 12-month average which is skewing downwards, declining, pressure. Oh, close to 12-month average. You think you're in the stage one? No, continuing to go down, and whoa, man, this I don't know what this price is insane. People bought here at 2,800. Then it goes down and what? Down and never closing above that 12-month average. Here, barely getting sucked down below. That's actually an awesome short, guys. This is just a beautiful stage. I know it's on the monthly candle chart, but even here, or even here, short here, even with that pullback above the breakout line, breakdown line, trying to test it, it's still holding up. Price action going back down, sideways move. Great opportunity to short right here. You know, when I say I hope for a pullback or price action to come and hook up with the 12-month moving average or the 30-week moving average if you're on the weekly for a continuation breakdown, well, you've had it all here, guys. Here would be an optimum. Horizontal breakdown line, close to 12-month moving average. You're protected here, protected everywhere. Nice place to put your sell stop. Low risk to reward, low risk, high reward, and then you ride that stage 2, guys. Beauty from 1200, from 948 to, check it out, $5. Even here, you'd still be in, guys. Look at that, you're still in. Has it closed above? Yeah, here you're out. So now when you get a close above the 12-month average, you're out. So now since 2016, 2017, 2018, we're up. Nice consolidation above the 12-month moving average. It's starting to incline. Price action is saying above. So you kind of had a breakout right here. Original breakout. Up. Sideways move. Getting closing in on the 12-month moving average. Exploding. Oh, too far away. Remember those candles. Those wicks. Price action going back in. Sideways move. Need time to digest. And right now, oh, right here, bounce off the 12-month average, gapping, opening below, not super duper, but closing above. And now, the month is trying to close above this horizontal breakout line. So if I have a close above 11.25, implied measure move, arrow, please. Check it out. Check. Whoa. Okay. Let's double up that arrow. Implied measure move, add it to breakout line. Oh man, that's insane. So I got a target about 1330, 1340. So that's how I apply my classic chart trading framework. Just this consolidation pattern going upwards, 12-month average. So we're establishing that the higher trend is actually for the past over a year going upwards. We have consolidation pattern right here, bouncing off the 12-month average. Continuation breakout right here if we have a close above that 1130 level. So that's going to help us a lot on the weekly. We're going to look at the weekly. We're probably going to be in a stage 2 continuation breakout. And we're going to check all the evidence to make sure that the chances of this advance are not going to be muted or have lower probability of being muted. All right. Okay, let's zoom in. Ah, man. All right, there you go. Cool. Remove. Where's my arrows? Love the arrows. Okay, outperforming the SPX right here. Yeesh. Okay, we don't have quite the volume yet. The week's not over yet. So unless maybe we have crazy volume here, it'd be pretty cool. I'd like to have twice the average of the previous 4 weeks. But right now, it's going up above the 30-week average. The embryonic breakout, where was it? I always look for the embryonic breakout. Not too good that it went below 30-week average. The Ichimoku cloud served as support, sucking that supply of buyers going back up. Here's my monthly defined breakout line. We're above it. I have some weekly defined breakout line right here, the high. So even the close above 1130, but ideally maybe tomorrow big thrust, or by the end of November, get that close above that monthly and weekly defined break outlines. Continue the action of that 30-week average, inclining upwards. And those are clues, check. I'm looking at for this Palladium play, PDL, on the Toronto Stock Exchange, guys. What? Basic materials, precious metals, mining, and minerals. Pretty much where gold's at. So I don't know if there's a strong correlation between that and gold. Let's compare it to gold. And it's actually outperforming gold, guys. So Palladium, if you're going to play that, it's actually been an outperformer of gold. Has it always been like that? Eesh, not always. It didn't hold up its value well here, this PDL play. But right now, this seems to be gaining a little bit more steam, more than gold, expressed in US dollars, guys. So Palladium, I'm going to keep an eye on it, really giving signs. If I really could get that volume, that crazy volume here, giving signs that it wants to continue. You see the damage of this red candle here. It's insane. Time needs all that time to recuperate. Stage 1, stage 2, stage 3. But sometimes stage 3s, they don't fail automatically in stage 4. They continue in stage 2. And that's what I'm looking at for PDL. Stage 2 continuation. Especially that on the monthly. It's been an uptrend for a while. All right. Well, okay, guys. That's it for me. PDL looking sweet. Ciao.